This is Alan Bush with ADMIS with the daily financial forecast for Thursday, October 29th. In the stock index futures yesterday, we saw a very quick dip just after the Fed released their policy statement, which was a bit hawkish on balance. And yet then futures were able to recover late in the day and close on the highs. Also today we are seeing some new highs for the move, at least for the S&P, now advancing to a 10-week high. So it seems a little bit ironic that we do get a hawkish statement from the Fed, and yet here we are at new highs for the move, suggesting that traders and analysts are looking past what the Fed said in their statement, possibly to something more bullish down the road. Also, we did have a couple of economic reports this morning. The GDP came in a bit weaker than expected. We also had pending home sales coming in, showing a decline, both of which suggest that the Fed is not likely to raise interest rates anytime soon in spite of their statement from yesterday. So our outlook remains the same for stock index futures. We are looking for higher prices for the balance of this year. And I think we can see new historical highs in all of the major indices next year. Now, moving over to the currencies, the dollar index advancing very quickly after the Fed statement yesterday. As we said, a bit on the hawkish side, which was friendly for the dollar from an interest rate differential point of view. However, no follow-through strength today. The dollar index is lower. Also, those two economic reports that we had, GDP and pending home sales, both on the weak side, also undermining the dollar index. So even though we did have some gains recently in the dollar on the Fed, I think that the main trend is still lower for the dollar index, and the highs that we saw last March will not be surpassed. And the main trend for the dollar index still appears to be to the downside, as in our opinion, the Fed will not be able to raise interest rates anytime soon in spite of the statement yesterday from the FOMC. Also, we are seeing the euro currency trading higher. Did have some better employment numbers in the eurozone and some better economic confidence numbers, so that supported the euro currency. Interest rate markets lower today, especially at the long end. That market is responding to the Fed statement yesterday. A bit of a bounce off the lows with those two weaker economic reports. Longer term, we do feel that the main trend is higher for the 10 and 30-year issues, especially in light of prospects of a very stagnant U.S. economy, and also central banks around the world we feel will be adding more economic stimulus. And the Fed, even though hawkish, at least to some degree yesterday, I think in the meetings to come will be a bit more accommodative, and I think it will be quite some time before the Fed is in a position to raise interest rates. So once again, remember, these are my opinions alone and not the opinions of ADMIS, and good trading, everyone.